So today is Tuesday the 4th of August 2026 and it is 8:02 a.m. And as you can see, this is the low of Asian session. This is the highs. As you can see, they've been tested. 1, 2, 3, 4, 5, 6, 7, 8. Now going on the ninth time. So it's been tested numerous times. So because it has been tested numerous times, if people trade support and resistance, people would say, well, this is resistance, this area, and they'd be looking to sell like this. Well, I don't know how big their stop loss would be, but this is the type of position they'd be looking for, right? Be looking to sell. I don't know how big their stop loss is, I just said, but they'd be looking to sell from this area because they think, oh, it's tested it 9 times and it's failed to close above, it's failed to go higher than this area, so this area must be the area that if we sell off, it'll go down, like it will drop. Because every time that tested it here, drop, tested it here, drop, tested it here, drop, tested it here, dropped, right? So a lot of people would be selling from here, support and resistance traders, because there's not any support. You can see this area here, right? You can see this area here, but as you can see, we kind of are in a bit of consolidation, to be fair, because if we stretch it back to here, price created this low, then created this low, then created this high, and then it's kind of just stayed within this range, and it struggled to break out of either zone. So all I'm looking for is a break above, right? Because what normally happens with consolidation is it'll break in one direction and then it will reverse type of thing. So what you'll see is it could break to the upside and then create a reversal pattern and then take out this side, the downside. And the reason why it does that is because at the end of the day, the markets is there to make money. It goes from liquidity pool to liquidity pool, right? So pound sign to pound sign, dollar to dollar, yen to yen, and whatever currencies there are that are out there. And the reason it does that is to make bread. Do you know what I'm saying? To make bread, you need to make sure you're getting stop losses. They don't care about your $10 stop losses, but they need to make sure your stop losses hit. So what they'll see is, okay, people think this is resistance, we're gonna take them out. And then once they've taken this out, what will then happen, people will be thinking, okay, we're gonna buy from here. And then once they start thinking, let's buy from here, then it will start to drop. Then they'll take these lot out, and then these lot will be thinking, okay, now it's broken structure to the downside. This is now going to be where they sell from, right? Because they'll be thinking break a structure, retesting. They're looking for sells, and then it will reverse. So the sellers will eventually lose, and then the buyers will eventually lose, and that's their whole objective. So that's why you want to wait for a clear breaker structure. So as you can see, it is body closed above this area, but it's still within the zone. So you want to see is a clear break to the upside, take out all the sellers, then it will sell off, and then a clear break or structure to the downside. And then it could continue to the downside given no retest, which means then the sellers won't be able to enter off the retest to take price lower. It will just break to structure and continue on. Or it could break to the upside and then continue on. But either way, I feel like they're going to take both sides. The selling, the sell side liquidity, and the buy side liquidity. But yeah, that is my update for now. But we'll see how it plays out. But right now, we've got a close above. So that is no longer the high. I don't know why I deleted it, to be fair. It's here. Breaker structure, as you can see. So now we'll just see what it does. We'll go on the 15 minutes, see how it looks. On the 15 minute, as you can see, this would be the structure point, and as you can see, if we mark this up like this, I want to see that on a 5 minute. 15. So that's what it looks like on the 15. So as you can see, retest 1, 2, 3, 4, 5, 6, 7, 8, 9. So same amount as it has the 5 minute. As you can see, it's retested this so numerous times, and every time it's retested in, it's dropped. Retest drop, retest drop, retest drop. Every time it's retested, it's near enough had a bearish candle straight after. And that just goes to show that sellers are really in the market, right? The buyers are driving it there and then closing out, and then the sellers taking over. So what could happen is a close above and a continuation to the sell side. The trade I took yesterday, as you can see, we exited here for a minus 0.5% loss. And as you can see, it did what I wanted it to do, went to TP eventually. I traded all the way up here. It would have, go back to the 5 minutes so you can understand. Went all the way up here, closed above this area of structure. As I said, it could retest into this area here. As you can see, it retested in, but it closed above. If I had a 10 pip stop loss, it wouldn't have stopped me out, but I would have closed it when it's closed above structure. But as you can see, 10 pip stop loss would have still won the trade. But yeah, as you can see, it retested in, traded higher, but I think that's because it was retesting this initial zone in the first place. Because as you can see, retested 50% just by the wick, and as you can see, it retested 50% again and filled its TP. So the right idea, the right concept, just wrong timing, and that's okay. I'd rather it be that way, that my timing's off, but my bias is right, instead of losing a sell like I did, and then it rallies all the way up to the outside, and then it continues on with the trend of an uptrend. Then it's like, oh, I got the whole direction wrong. I'd rather get the direction right and my timing off, because you can always fix your timing. But if you're getting the whole market direction wrong and you're just losing because of market direction, then there's a lot more to fix. So it's kind of like pick your poison. Do you want to have bad timing in the right markets, or not even get the market right to even care for timing? Timing doesn't matter. And being in and out the market doesn't matter if you've got the whole bias wrong in the first place. Really, you might win in a couple trades, but in the long run, you're just not gonna get anywhere. But that's enough yapping. Been talking for a good 8 minutes. It's a bit too much still. But yeah, close bar structure. Give an update if any other madness happens. But that is it for now. Okay, update now. As you can see, what I said, it's retested this area numerous times. London sessions opened, 2 bullish candles, taking it all out. So if they were selling from here, they'd still be in the trade, to be fair. But I don't know how they chase upon resistance. What if it closes above structure? Did it close out? Because I'm pretty sure on the 15 minute it would have closed above as well now. Or 30 seconds. But yeah, and that's what I mean. Because it's retested this area numerous times. For an area to be retested numerous times and drop means that people are selling, right? And if people are selling, 9 times out of 10, their stop losses are around the same place. So it can work. Like this could work where they just keep selling and it eventually keeps dropping. That could work. But the majority, I'd say, of the time, if there's a clear area everyone's selling off, a clear area everyone's buying off, it won't work, right? Because the markets profit off you losing, you know? Like if you think about the banks, the big hedge funds, all these, they profit off you losing money. They don't profit off you making money. They profit off themselves making money by you losing money. If you think about a broker profits off you losing money, you know? Funded platforms profit off you losing money. When it comes to trading, everyone profits when you lose. No one profits when you make money. Do you get what I'm trying to say? So with that information, and if you see that the majority of people that trade lose money, that's why it's such a thing everyone wants to get into, because they realize because so much people are losing money, there's money to be made. If everyone's making money in an industry, in any industry, if everyone knows how to make money and everyone can make money, then how would the money be distributed? How would everyone be able to be paid? There has to be people that are not making money. There has to be things going on. You know what I'm saying? There has to be things going on for them to be able to pay people. Platforms go bankrupt in funded, companies go bankrupt in the trading aspect because there's no more money. People are making too much money, so they can't pay them. People aren't losing as much as they're making. That's why you see these companies going bankrupt and shutting down and madness going on because people are making too much bread. So, yeah, man, with that information, you just need to understand if it's a clear area of support or resistance and you're seeing that it's rejected it numerous times, just watch it. Don't think, oh, let me get into this, so I'm gonna miss out. No, just actually watch it, and count how many times that actually works. So if you mark this area up, everyone's selling from this area, okay, I'm gonna mark it up. Do that 10 times, 20 times, and you'll see how often it actually works, you know, because there's probably more examples. Probably more examples. Let's say here, this isn't even true resistance to that. This isn't even true support, to be honest, but it's just kind of an example. As you can see, I was in a sell here. It's created this low, tested the low, didn't close beneath, tested the low again, didn't close beneath here, so that's why I held the trade in the first place. Then it come back up, tested the area again, tested the area again, tested the area again, tested the area again. Now it's traded higher. As you see, I closed out my trade here because of my reasonings, but someone else might have got into buys thinking, okay, it's now going to go up. Or what they might have done, support traders, is as you can see, look, they would have been buying here. That's why there's so much wicks and it held this area for so long because there was buys here. There was buys here. And that's what caused this rally in the first place. It can't rally without no buys. It can't rally just because it wants to rally. It has to have some sort of buy increase that overtakes buyers, overtakes sellers. If it's going up, there's obviously buyers overtaking sellers or sellers taking profit, which means they're closing their trades. And when you close a sell position, it turns into a buy position because you're closing the sell, which means you're doing the reverse. If you buy the pound and then you're at a profit or you're at your loss, it now means if you buy the pound, it means you're selling the dollar because you're thinking the pound's gonna go up, the dollar's gonna go down. So that's what you're doing. So when you close a trade, you close a buy, it turns to a sell, right? And that's how you make the profit. If you're selling and you close the trade, it turns into a buy, right? Because you're out of the trade. That's what you're doing. You're selling the difference and you're buying the difference, right? So as you can see, big bearish candle. So there was sells here, then there was buys. Now the bearish candles become smaller, smaller, smaller. Big bearish candle. Now the bearish candles become smaller because the sellers are getting out and turning into buyers, or the sellers are getting out, and because they are getting out, the buyers have more control. So when it's got to here, they're thinking this is a strong area of support because it created this. So if they buy from here, it will continue up. And as you can see, held this area for a bit and then crashed below and continued on. And that's what happens. That is what happens. Where's another good example? As you can see, this is clear structure. This is literally like textbook structure where every person that's in their cell wants to see high creates low, creates high, high creates low. This is what traders teach because this is just easy stuff. But as you can see, liquidity, 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 liquidity. Why? Because there's stop losses above every single one of these highs. That's why it's not going above the previous high. This is the high. This is the next high, lower high, lower high, lower high. The reason why it's getting lower every time is because one, it's moving within structure, which is great. But two, every time it retests into this area, people are selling again, and their stop losses are above the previous high. So that means it's not going to go above the high if everyone's selling near enough at the same areas, right? But what will happen eventually is they will all get stopped out. It can't just continue on like this forever. So everyone's making money because that's just not how it works. So as you can see, this is the high. So everyone's stop loss. This person's stop loss probably above this one. This stop loss probably above this one. This guy probably above this one. This guy probably above this one. This guy probably above this one. And then they probably continued on. And then what's happened? It's gone up here. So now they've probably moved their stop loss, or this guy, this guy, this guy have all been stopped out, and this guy. But this person is probably still in the trade, so they might have entered another sell. Or these people probably think, okay, now it might be buys. Then they've seen this happen. So they've seen a high create a low, low create high, but it hasn't gone above this high. It's created a new low. So they probably think, okay, I'm going to sell again. They've sold again. Guess what? They've lost again because their stop loss is above these highs. It's gone lower. So now they've probably tried to sell again and they've lost again. So now they're thinking, okay, it probably is buys because as you can see, this big wick, it's now taking out this high. So because it's taking out this high, they're probably looking at buys. Looking at buys, and then what happens? Crashes all the way down. So that's just how the market moves, you know? Same as here. All these, it's going down, it's going down. Nice sells, nice sells, nice sells. Easy stuff to see. Break to the downside, taking out all these lows, right? Which is great because it was bearish momentum in the first place. It's done this, and a big push to the upside. So everyone that was selling, out of it. And then as you can see here, nice structure going to the upside. Nice structure going to the outside. It's continued on in London session, going to the upside. And then what's happened? Taken out all these lows, stopped this guy out, stopped this person, 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 all of them, stopped them all out and then gone all the way up. So all these sellers, or no, all these buyers that were in the market here have just lost out because it's done this now. And let's continue to the upside. And yes, they could have caught this trade here, this support trade here. So as you can see, retested in, created this high, gone low, created this high, gone low, retested it, gone higher, created this high. So they could have bought off here, but the majority of them would have lost from buying within this region here. So it's something you can actually test yourself, mark out the support and resistance areas and see how often they win. There's obviously people that can make money off support and resistance, but I don't feel like the majority of traders that trade support and resistance actually make money. There's obviously going to be them anomalies that make money off support and resistance, because there's people out there that make money off all strategies. You could give 10 people the same exact strategies, the exact same criteria, and out of the 10, probably three or two of them would ever be able to make money off of it. So, but that's just trading, isn't it? You could buy a course. This guy could be using the exact same course you're using, and in 2 months he's made money. 6 months he's made money. This other person might take 5 years to make money using the same tools, and it's just about comes down to comprehension skills, you know, comprehension, how you see things and why you see things, and are you as disciplined as the other person? So there's a lot of factors that come into it. It's not as simple as being able to look at a chart, you know, it's being able to understand you can lose and not going into trades with so much confidence. You should have the same confidence you have in every trade. You shouldn't have more confidence in one trade than another, you know. And also being able to cut your losses, understanding when you're wrong. It's not all about having faith. You shouldn't have faith when you're trading. You should go off your rules and regulations and, you know. But yeah, that's more waffle. But as you can see, it's taking out all these highs and now it's kind of retesting this area to use as support. So as I said, break structure to the upside. It's now retesting this area because people are now thinking, okay, all the sellers are out the market. It's broken structure to the upside. Let's use the resistance area as now a support area. So where we were selling from, we've lost. It's broken structure to the upside. So it probably is going to continue going up. So when it gets back to this area, let's look for buys. And that's why you're seeing these wick rejections because people are probably buying from the sell area, which does make sense. But I don't think it'll work. I think it's gonna break structure to the downside and then continue on to take out these lows. Personally, that's what I want to happen. But whether that does happen or doesn't happen, then that's that in it. But yeah, if it does show signs that it will continue to the upside, so this is a low, this is high. So if it does show signs it's going to continue to the upside, then yes, I'll be looking for buys. But I go off what happens, not what I think. I can I always have my opinion of, oh, I want this to happen for this reason, da 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 da. But whether that forms or doesn't, but whether that forms or it doesn't, it's fine, you know. That I only go off what I see. I can have my opinion or whatever, but I make sure that my opinion and my bias doesn't affect my actual decisions on what's going on. If I'm just thinking bias, I'm gonna make sure I see bias. I'm gonna everything I see, oh yeah, that's a buy. Like I can see this as, oh, it's broken on the structure. I'm looking for a buy anyway. Yeah, this makes sense. I'm gonna buy. It could win, it could lose, but going in with no judgment, no bias, and just voicing your opinion, but making sure that doesn't affect or have a bias on what's actually going on is way better. Because if I see, oh, it breaks structure to the downside, I'm not gonna still be thinking buys, you know. But if you've got a bias or bias, you're gonna look for a buy, regardless the trend of the market. So I make sure I only go off what is actually going on, but I always give my prejudgment, you know. But yeah, that is it. If anything else majorly happens or anything major happens or whatever, give an update. But for now, not really much going on. Look at the 15 minutes as well. So yeah, as you can see, the 15 minutes closed above it. Now taking all the liquidity. Uh, so yeah, on the 50 minutes closed above it. It's probably going to close above it again. But as you can see, since opening, three bullish candles on the 15 minutes, so not really much to go off on the 15-minute. It's not really giving us any form of structure, just going up, which isn't nothing we can do anything with, you know, no lows, no highs, and you know what I'm saying? Like just up. So not really much to do with that. But yeah, we'll see. We'll see what happens. We'll see. So as you can see, price has now broken the high of London session. So we will now be looking for buys from 50%. Structure. And that. So I'm going to enter with 1.0 as I usually do. 266 stop loss. And then set a buy limit for 34366. Buy limit is set. There's no news today as well. I've checked. But yeah, it's near being hit. Even though it's been hit on the charts, it hasn't actually been hit on MetaTrader yet. Now it's been hit. Mm-mm. And what we could actually see, yeah, is a straight break to the downside, and this just be a fake out. And then if it retests in and then break structure again, then I'll be looking then I'll be looking for sells. So if it was to actually break this low, right? Because as I said, I can only go off what it's showing me. It's broken structure, it's created a high, high's created low, lows then create a new high. So the only thing I can go off is, okay, it's buys. Now if the buys don't play out and it does something like this, low creates high, high break structure, retesting, break structure again, then I can be looking for sales to take price lower. And then that now means, okay, I think it will actually take out these lows, right? But I can only do that if it shows me it's going to do that. I can't just sell off anywhere. Oh, it's going to sell, so I'm just going to wait until it shows me signs for sales. I can't do that. And I can't say, oh, I think it's gonna buy, so I'm just gonna wait until it shows me signs of buys. No, I just go with what's there. If it's not there, I'm not gonna think about it, you know? So it showed me signs of sells. It showed me signs of buys. Created London session high. London session high created a London session low. This is the most recent low here. So mark the most recent low to the high that broke the structure, which is this one, goes above, and I buy off of it. That simple. Like you have to just keep your trading simple, because if it's simple, then you can replicate it, you know? So I just like to keep it as simple as possible. Because you could have a strategy that's mad technical and you could have a very good win rate because you have a very, very good criteria. You could have a very, very good criteria because you have so many things that need to work for it to work. You have so many things that need to work in order for that trade, for you to take that trade. You might have 10 things on your checklist, but them 10 things on your checklist might mean that you don't get that many trades. One. And two, how many trades realistically are going to fall under the 10 in your checklist? And if you have a checklist where you need 10 things or 5 confluences or 10 confluences, imagine you only have 8, then what you do? What do you do? Do you not take the trade? Do you take the trade? Now, if you take the trade and you lose, you're going to think, if it had these 2 extra confluences, it would have worked. If it had these whatever confluences, it would have worked. So you're always going to have that thought in your head. So to have so many confluences like high time frame biased and make sure that correlates. What if it doesn't? Then what do you do? You know, if it doesn't, then what do? You just wait and just keep waiting. And then when do you stop waiting? You know? So that's why I try to make my criteria as simple as possible because it's easy to replicate. And anything you can replicate in life and anything you can get into a habit in life will eventually you'll be able to see easily where you're going wrong. If you have a criteria of 10, you don't know which 10 of the criteria is making the trade win. You don't know out of the 10 which of the criteria is making the trade lose. So when it comes to reevaluating and looking at how you could have improved your edge or whatever, it's going to be very hard to do. Whereas I only have, what, 3 confluences. A high or low needs to be formed. London session, it needs to break that structure and then I need to enter off 50%. And I will close if it breaks structure against me. That is it. Right? So I know clearly which one is wrong. If my stop loss gets hit but it keeps going to TP, okay, that's an entry issue. If I keep getting stopped out because I'm getting the market direction wrong, okay, that's easy. I need to just pay attention and figure out the market direction. Maybe hop on charts an hour earlier to really take in which way is the market going today. If what I consider a breaker structure isn't a breaker structure, then how am I going to learn what a breaker structure is? Okay, let me go back test what a breaker structure is. What is a true breaker structure? What is a fake breaker structure? You know what I'm saying? That it's very easy to go through these little things because there's not that much confluences. So it's very easy to back test. I can back test my strategy very quickly. I don't have to, okay, let me go to the 4 hour, let me go to the 1 hour, let me mark up this zone and look at the 5 minute and look at the 1 minute. I don't need to do that. It's just one time frame, you know? I trade the same way on the 15 that I trade on the 5. I just use the 5. I use the 15, but I just use the 5 sometimes to just pass. Like if I'm taking too long or I want to risk 2%, I know that my 15-minute strategy has a very low win rate. So risking 2% is stupid when you have a very low win rate because if your win rate is 40%, but you catch 1 to 3s, if you're risking 2% and you just go off simple maths, if your win rate is 40%, that means out of 10, you lose 4, you lose 6. So you lose the majority, right? So I know if I enter this funded and I only have 5 trades to win, but my win rate is 40% or around that margin, I could lose 6 trades without a win because that's what my win rate is there for, to tell me that is a possibility. So if I know that's a possibility, risking 2% would mean every 10 trades, I should win 4, which means I would have blown near enough 2 accounts or 1 account and be down 2% on another account just to make 1 win, right? And you don't know which form it's going to come in. Do you know what I'm saying? You could have a 40% win rate and taken 100 trades, taken 20 trades. You don't know when you're going to win. You don't know when you're going to lose. So if I go into a strategy that has a low win rate and I'm trying to risk high, it is pretty stupid unless you have a lot of money to keep buying more accounts. Because if your win rate is 40% and that's across 100 trades, that means 60 trades you are going to lose. Now, can you buy enough accounts to be able to lose 60 accounts without a win? Obviously, that's a bit dramatic, but it's just an example of using simple logic and simple maths. And I don't think a lot of people that trade like to do that. They like to go off, oh, I can't possibly lose 10 trades in a row. I can't possibly do this. But if you go off your win rate, what does your win rate say? Oh, my win rate 70%. So, okay, out of 10 trades, realistically, you should only be losing 3 trades. That doesn't mean you can't lose more. That doesn't mean you can't lose less. But that's what you can work with. My win rate's this, so I can risk 2%. If you've got a 70% win rate, you can risk 2%. Why couldn't you? Because your win rate says you only lose 3 out of the 10. So you're good. If your win rate's below 50, why are you trying to risk 2%? Because what's going to happen is you're going to lose your trades and lose bad trades and think, oh, this strategy doesn't work and give up and whatever, whatever. That's just stupid, isn't it? Because your win rate showed you this how much you're going to win, this how much you're going to lose, this how often you're going to win, this how often you're going to lose. So you can't be pressed when it happens. You know, you can't be pressed when it happens. I know I have a very low win rate, my 15-minute strategy, but I know over time it makes money. I know across the year I'll end in profit of some sort, you know? Obviously that fluctuates, which it does for everyone else, but I know it ends in profit. But I know for funded accounts, yes, it can work, but on a very bad month or a bad month, it it's shocking. Do you know what I'm saying? It's shocking. I could, because my win rate is 40%, I could have a month where I've lost 6 trades in the month with no wins. Now, if I'm trading a funded account and you're trading for a month, you've lost 6 trades, you've lost what, 12%? You know, 12% with any funded account, it's gone. So you have to risk 1%, you have to risk 0.5%. And the reason you do that is to give your strategy breathing room for it to actually form the strategy. You know, if you've got a low win rate, you can't think, oh, I'm going to try pass it in a month, I'm going to try pass it in a week, or I'm going to try. Because your win rate says this is not the strategy for that. This is a long-term strategy. This is a strategy that can only work if you give it time to prove its edge. You can't take 10 trades and expect to win this many because your strategy has shown that's not this strategy, mate. This isn't for that. Do you know what I'm saying? It's not for that. This strategy is for long term. This 15-minute strategy is going to work when the year's done. This is going to show after 6 months. It's not going to show within a week or 3 weeks or within a month. Because you could have a very bad month and that could be the funded gone. But if you lower your risk, you will see very bad month. But look at the other months. It's all come back and now I'm in profit. Whereas with the 5-minute strategy, because it is trading the same way as the 15-minute, and I normally do take the same trades on the 15 and so forth, I feel like it's easier to pass accounts on the 5-minute for the simple fact, yes, it near enough does have the same win rate, but I can also exit trades way easier, right? For example, yesterday, I took this trade here, right? This trade here. As you can see, dropped into profit, great, 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 whatever. It's now gone here. The breaker structure, where did I exit? Was it this candle I exited on? I think it was this candle. This candle I exited on. Cool. So I entered here. So I exited for about 4 pips. And then here, exited for 2 pips. Altogether, that cost me a total of 0.5%. I was risking 2%. Now, on a 15-minute time frame, 50-minute time frame, 50-minute time frame as we're on, as you can see. Let's say for argument's sake, let's say I entered off here. So breaker structure, retesting, I've entered off here. So this is the area I'd need it to break to close the trade. Now, if it's traded above here, right, this would be 8 pips for my stop loss. And then here would be 10 pips for my stop loss. So altogether, I would have lost 1.8%, near enough 2%, right? And that's not to do with my strategy. That's not to do with I got the bias wrong. It's not to do nothing with that. It's generally just the time frame, you know? So with the 5-minute, it can show me way quicker because it's a lower time frame. I'm wrong and I can accept I'm wrong. So me losing this trade for 0.5% means that if I win a trade now, I've gained 5.5%. Now, if I took down the 15 and I lost on the 15, I would have lost 1.8%, which means if I won 6%, I would have only been walking away with what, 5 point, let me do the maths. What, 5 point, no, 4.2. Yeah, 4.2. Do you get what I'm trying to say? Which is total difference. So that is the key difference. For example, last week I think I lost three trades. Three trades? 3 or 4 trades, I think, last week. 3 trades I think I lost last week. And out of the 3 trades, not one of them hit stop loss. I think actually maybe one of them hit stop loss, but the others didn't hit stop loss. So I closed for like 0.8. I've closed for 0.5 this week, 0.7. But then when I've had to close in profit, it's $300 in profit. So it's 3%. Each trade I closed in profit was 3% in profit, right? So that meant that the 3 losses I had after I had that initial win or the initial back-to-back wins, I'm still in profit on the account, Like I'm still in profit. It's still in profit. And that's just because I'm minimizing my losses, but my winners are being pushed to their full potential. So if this trade goes on to lose, for example, I've entered one trade at, is this 50%? Let me check. So I've entered one trade at 50%. This is 50%. Visibility, just on 5. So I've entered one trade at 50%, and then I've entered the next trade at, because of spread, it's entered me so high. 1.34388. So I've entered there. I don't know why that the spread's just done me dirty. So 12.2 stop loss. That's my entry. Same TP. 27 pips. Now if I win these trades, that's near enough 6% gain, right? Near enough 6% gain. Now if I lose these trades based on my entries, and this is the structure I would close it at, if we look at how far it is from, I've got 10 pip stop loss. So I've got all this breathing room. But if it closes beneath, let's say it closes all the way down here. I've saved myself 2 pips, right? But if it closes here, for example, 4 pips, that's $40 I've lost. And then for here, if it, obviously I'll close it at the same time. Here, that'd be $60. So in total, I'd be down 150 this week. Now, if this keeps happening, and there's eventually a winner that comes through, it will clear out 6 trades. One win will clear out 6 trades. Now, if I'm on a 15-minute time frame, because it doesn't give you that, because it's a higher time frame, so the structure points are different. And structure normally on the 15-minute means the trade is wrong. It's taken out the high I'm selling off, the low I'm buying off. It means if I take one win, it takes 3 losses and the profits are gone. Whereas on the 5-minute, it gives me near enough 4 to 6 opportunities to win again before my profits are gone. So the lower time frame, the 5-minute for me gives me more opportunity to make mistakes and more opportunity to be able to risk more, type of thing. Because this trade could go 20 pips in profit and start to reverse. On the 15-minute, I don't really see the reversal because it's very impulsive. It's very quick losses, very quick wins. So you don't really see much going on. Whereas on the 5-minute, you see every candle. So if I see, okay, it's starting to reverse at a 1 to 2R, or it's starting to reverse at 2R, I can close out. To close out at 2R, that's 4%. If my losses are 0.5%, 1%, and things like that, a 4% gain is great. It's great. It's giving me a lot of leverage. But yeah, that's all I'm trying to explain. That understanding the time frame you're on and understanding what your objective with is that time frame, it's different. You could have a great strategy, low win rate, profitable every year on a personal account because you understand you have your bad months. You might have 10% drawdown. That's crazy, but you could, like the way you trade, but you know that you're ending the year with 20% in profit or 15% or whatever profit it is. But on a funded account, understand you need to make 15% to just pass. So to just make 15% to just pass, if you're making 15, 20% at the end of the year, in 12 months, if it takes you to make 20%, what makes you think you're going to get on a funded and make 15% to pass? Unless you're willing to take a year, which makes no sense because taking a year to pass a funded, not being paid is crazy. Do you know what I'm saying? So you have to understand your risk. And you have to understand, you know what? This 15-minute strategy or this strategy I have, yes, it works. Yes, it's profitable on a personal account. When it comes to actually passing or going down a funded route, I need to find a way to use my strategy, but maybe in a lower time frame, or maybe alter this so I can enter more trades, right? The way I'm trading on the 5 is the exact same way I trade on the 15. It's just a different time frame. And if you have a strategy that's profitable, yes, it might be more profitable on a different time frame. Yes, it might be profitable with different R to R, but it shouldn't, in my opinion, change or alter by that much. You could have a 15-minute strategy that if you follow the same rules on the 15, it should reflect on the 4 hour. If you trade the 4 hour a certain way, you should be able to reflect that in the 15. Yes, it'll be way quicker, and yes, on a 4 hour from 15 will be way slower. But a breaker structure will still remain the same. 50% should still remain the same. Your entry point should still remain the same. You know, like not a lot should really change, to be honest. You know, so me changing from a 15 and understand that 15 is not working right now on funded accounts. Let me use the 5. It's still the same rules. It's still the same breakdowns. It's still the same things and structure and same confluences to enter the trade. Now, if my confluences were not profitable and didn't work on the 15, then any other time frame after that or before that doesn't matter. 5 minute, 1 minute, hour, 4 hour, daily, doesn't matter. It's strong in it. But if the confluences are right and you've got an edge with them confluences and you've got an edge with that time frame, if you apply them confluences to a different time frame, it will either improve your edge or worsen your edge. But it shouldn't be that different to where the edge started, if that makes sense. You know, you should be able to take a time frame and use it on any, you should be able to use your confluences on any time frame and it still is profitable, you know? Because if you think about it, people that do top-down analysis, they're using the same criteria and the same confluences from the 4 hour all the way down to the 5 minute. And that's how they get their entry. And they are profitable doing that. Or some of them are, you know? They're not using a 4 hour confluence that's different to the 5 minute confluence, and the 5 minute confluence is different to the 1 minute, and the 1 minute is different to the 1 hour. Because then that wouldn't even be a strategy. That would just be doing whatever you're doing. Like it's not even making sense. So as long as your checkpoints are the same when you go down the time frame or go up the time frame, if it was profitable to start with, it should continue on. You know, the 15 minute has a low win rate. It's a low win rate strategy. So the 5 minute, I'm expecting it to be a low win rate strategy. But I'm just understanding that with this low win rate, I can minimize my losses. And that's all it is. I don't expect, oh, on the 5 minute, I'm going to win more trades. No, I don't think that. I don't think my 40% strategy is now going to turn into 80% or 70% or whatever. I'm not thinking that at all. I'm thinking this 40% strategy can minimize my losses, which then means I can risk 2% because when I do win out of the 40%, it will be it will be a quicker process to pass than it would on the 15. The drawdown's not going to be as bad. The losses aren't going to be as bad, you know, but the profit will remain the same. The 15 and the 5 minute, the losses will be different, but the profit target, the risk to reward will always remain the same. So a 6% gain on the 15 minute will be different profit to the 5 minute, not because it's different amounts of money, because of the drawdown, right? If I'm gaining 6% on the 15, but I'm in drawdown by 4 to 6% because all 3 trades hit stop loss, then of course I'm now back at break even. Now, if I do the same on a 5 minute, I know that out of 3, 4 trades or 10 trades, I know how many roughly are going to hit max stop loss. I know how many are not going to hit max stop loss. Do you get what I'm trying to say? So I know the downside, the drawdown's gonna be way smaller on the 5 minute. You know, it might not be, but based on the stats I have now, the drawdown's way less than the 15. And to pass a funded and to pass it as quick as possible and to be able to get to them payouts and do them things, it's not about how much profit can you make in a month. It's about how much drawdown can you avoid? How much drawdown do you need to be able to pass? If you can make 20% in a year or 20%, let's say you can make 10% in a month. Okay, but before you make that 10%, how much do you need to lose before that works? It's not about how much you can make in a month, it's about how much you can not, how much you don't need to lose before you make that amount, you know? But yeah, give an update if the trade does anything mad. But right now, it's not really too much to report on. It's rejected off this level here, rejected off it again, rejected off it again. So it could become a point of liquidity because people could see this area as support. And as I said before, same thing happened here. It's retested into this area. As I've said, as you can see, they've used it as support. But I can't be like, oh, because they're using it as support, I'm now going to exit the trade because it could, no, I have to just follow my rules. My rules never had support or resistance in there. It never had to take into consideration support and resistance, so I'm not going to start taking it into consideration. But I can clearly see it, but doesn't mean I'm going to take it into consideration. Don't care for it, but I'm just stating what I can see, right? So this is the area that was once resistance, been broken above, retested in, retested in, retested in, gone higher. So what could happen is it could break beneath, break in this structure, retest back in to this structure here. So something like this, retest in, break structure above, break beneath, retest back in, and then go low. That could happen, and then I'll be looking for sales if that does happen. If it breaks beneath, retest and goes low. But I can only go off what it's showing me. And what it's showing me right now is a low has been created on the session, a new high's been formed, it tested the 50% with a wick, and that's it. So see how this trade plays out. Right now we're floating in $50 profit, so about 0.5%. If we closed out right now, we would have got rid of the loss from yesterday, and we're not even in profit by that much. But we also didn't lose that much yesterday, but we could clear the loss right now. But that's not part of the plan. To clear losses, part of the plan is to make bread, and we don't make bread by clearing losses, we make bread by hitting targets. So we're gonna, yeah, just wait for this trade, give an update if anything happens. But yeah, right now, not much to report, and it's just, I don't know, figuring out what it wants to do, I guess. But that is it. Little update on the trade is 11:41, and as you can see, price has simply just kept within this upwards momentum. It hasn't really had that retest yet. So some people would think this is a breaker structure here, but for me, it's not really a breaker structure. Right here, must be the low. To me, that's not a breaker structure. The reason for that is because, wait, what is this? Reason why that wouldn't be a breaker structure. Wait, why is that even there? That's supposed to be there. Yeah, the reason why it wouldn't be a breaker structure is because it's not actually retested this area, right? So if this is the structure it's broken out of, let's say this is the structure it's broken out of, this here, if this was a higher time frame, all it would look like is just this, just straight up with wicks on either side. So what I want to see is a retest into the area and then continuation, and then that will become the new structure. Or if it was to, or what could happen is It's created this high, so this is the high. And if it retests in and then fails to continue up and then breaks beneath, then that's when I'll close the trade because that means structure is now broken. But if I look at like, it's not that this matters, but just an example. If you look at a 1 hour, so I've entered here, here and here. If you look where I've marked up as a break structure, it's still a bullish candle. So it's just one bullish candle, two bearish candles. So structure hasn't been formed. This would be the low of the 1 hour, but obviously that doesn't matter to me. But it's just an example of what it would look like on a higher time frame. It's just one big bullish candle, right? There's no clear retests type of thing. So for me, when I do enter on 50%, I wait until there is a clear retest and then a break of structure in either direction, and then that's when I will decide to close the trade or not. As you can see here, as you can see here, entered, right? You could have said, oh, this is the breaker structure because it's created this high and then it's traded higher, but it's not because it hasn't retested back in to where the breaker structure was. It was only until here where this is the structure point. It's traded up into here, this area near my entry, and then it's broker structure again. And then that breaker structure, now what it should do is retest and go lower, but it didn't. It broke structure, closed above it, and then it continued on. And then it would have eventually stopped me out if I was still in the trade. It even closed above the London session high, as you can see, broke the London session high because this was the highest point of London session, closed above it. So that goes to show understanding what is a breaker structure and what's not. It's two different things. Like, look, this is a clear example. If I closed here for a breaker structure, that wouldn't have made sense because look now, they'd say, oh, it's broker structure here, but look, it's traded in, retested this zone. See, they would say from the wick to the bottom wick. I normally do body to body. So the body's here. Look, it's wicked straight into the body. And then it's traded higher, creating a new breaker structure. So now this would be the new point, new breaker structure. And yeah, I will remain in the trade. Now, this low now doesn't matter because this is the low that now does matter. And that means this low has now created these highs. It's retested in, it's gone higher. Now, if it comes to retesting and goes lower than this point, then I'll manually close because it's broken structure to the upside. It's retested into my trade. Why would it break structure and then go higher? You know, unless it's going to fully stop me out and then go higher, you know, would it make sense? So it just goes to show, and that was a very good example of it happening in real life time, you know, understanding what is a break structure and what's not. Because what can happen is if you enter and you close a trade because you think it's a break structure, everyone has a different opinion of what a break structure is. But if you get the break structure wrong and you've back tested it a different way, then obviously your live results are going to be affected. So understanding what a breaker structure is very, very key. It's very key. It's very key, you know? Because if I didn't understand that, I would have closed out here for a near enough break even trade. And then I would have done this and I would have been annoyed, you know? But then if you closed out here and then it continued down and then closed down here, then I would have lost more, obviously, because if I've closed here, then I've not lost as much as I would lose if I closed out here. So it's just one of them things. Go off your rules, go off what's your breaker structure. Everyone has their different opinions and outlooks of what is a breaker structure and what's not a breaker structure. But as long as you're following your rules and what you deem as a breaker structure, follow that plan. Don't just close a trade because it's going against you, you know? Don't just look at it like, okay, this low created this high, it's gone beneath, I'm closing it. Just because you want to save yourself the little profit you're in. Like, that's just stupid. Don't look at it from a profit or a loss standpoint. Go by structure. What is structure showing you? What is structure doing? You know, this morning I said I thought it was gonna trade above, take all the liquidity, and then look for sells to take lower. I said that. But I also said it's not showing that, it's showing buys. Why? Because it created this high, created this low don't create a new high. So when it got into 50%, I entered. No questions asked. I didn't double think it. I didn't nothing. I just entered because it's showing me buys. I might have been thinking sells, but I'm not equally thinking sells. So now I'm going to enter the market with a sells opinion. So I'm just going to look for any sell that I'm just going to try and make a sell out of nothing. No, I think sells, but it's not showing me sells. It's showing me buys. So I'm going to enter a buy, and that's what I did. You know. So that is the update. It's 11:48. Um, pre-London session. It's what 12. Kind of consolidates around 12. There's no point setting a marker there. But if the trade does somehow make it to 5 p.m., we'll manually close. Put a marker down for 1 p.m. as well. Uh, don't need a marker for 1 p.m. It's normally 3 p.m. 3 p.m. has a very because it's normally 30 minutes into the futures market. I don't know why, but has a very like I don't know. 3 p.m. you'll see an impulse 9 times out of 10 in GBP USD. I don't know if yesterday there was a clear example of that. Yeah, I don't know. No, no, no. Yeah, I don't know. Maybe it's just in my head, but 3 p.m. for me, it feels like there's always an impulse that is very clear what the direction becomes from 3 p.m. onwards. Let me try to find. Are there any examples of this though? So I just don't look mad. Yeah, no, there's no clear examples of it, which is annoying. Oh yeah, don't worry, I'm just waffling, man. Yeah, I'm just waffling. But yeah, that's how the trade is so far. We are currently up. Let me check. 164, so $164, 170 now, 146 now. So about 1.5%, 1.6% around that mark. So yeah, still got a long way to go. You know, nothing crazy, just about 10 pips in profit. 10, 5 pips on that trade, 8 pips on this one. So yeah, nothing, not up crazy amounts. You know, still early in the trade, even though we entered at what time? 9:30. We entered 9:30. I think we entered 9:30ish around that time. But yeah, been in the trade for 2 hours, 2 hours and a bit. So yeah, we'll just see how it plays out, what happens. But that is the update. Oh, okay, it's just turned 1 p.m. Another update on the trade. We are still in it. It's still in profit. Uh, this is the most recent low, as I've said, I think. This most recent low. So if we close beneath this level, we'll close the trade. But yeah, there's no reasoning right now for me to close it. It's been a very respectable trend, you know, a very respectable trend. It's followed through, as you can see. So hopefully it just continues that way. 2 TP. But yeah, I've been in this trade for entered here. So 9:30. I've been in this trade for 4 hours now. Yeah, going on 4 hours. So yeah, long man. But because it's a 5 minute on a 15 minute, you don't really have to monitor it like that. You know, just every 15 minutes, just check your phone or check your whatever. But because it's a 5 minute, you have to actually be more focused type of thing to see if it's breaking structure, if it's showing you that it's retesting the highs and struggling to close above, and you know, it's a bit more trade management. But the trade management is what makes it work. The trade management is what makes you minimize your losses and maximize your wins. The trade management is the key effect and the key reason why I like the 5 over the 15 at the moment. So yeah, man, just gotta keep managing it. We'll give you an update if anything else happens. But right now, not much to report. It's just 1 p.m. Sitting profits and the trade. So yeah, hopefully hits TP soon. So it is now 219, and as you can see, price has had gone up about 18 pips. So what, halfway to TP, and it has started to reverse as US session has come, and now it's retesting this area here. So this would be the area it's retesting. As you can see, it's tested it once. So we'll see if it closes above. Oh, 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 oh. See if it closes above or beneath, but if it closes beneath, then we'll close out the trade. But yeah, we'll see how it goes. We'll see how it goes. But yeah, it was up up 18 pips, which is about 4%, I think, altogether, 4%, or maybe just a bit under 3% ish. And then it's reversed. But as you can see, we have this big bullish candle. It could be a big bullish candle, fake out, and then go lower. But whatever happens, I just follow the plan day in, day out, win or lose. As long as I'm sticking to my rules and my plan, it's all that matters, you know? US session is open, so I could do something like this, retest into here, and then go lower. That can be a possibility. Or it can generally just be retesting this area to go higher, but yeah, we'll just have to see, man. We'll just have to see. As long as I follow my plan, that's all that matters. I don't care if it wins, I don't care if it loses. I just want to make sure I'm following the plan that I've set out, you know? But yeah, that is the update at 2:21. And yeah, if anything major happens, we'll give another update. But this trade is taking long. Been in it since 9 a.m. now. You know, it's just getting long, getting tired. You know, I have the urge to just shut it because it's taking so long. I just want to go sleep, but it's cool still. Just gonna have to just sit and watch it. But it's gonna be it's gonna be a long watch, over an hour of watch time still, because this is taking ages. But yeah, still in the trade, still in profit of 1.6% again. So just gotta see how it plays out. So this is how the trade's looking now. As I said, 3 p.m. Like after 3 p.m. that first hour, that first 30 minutes at 3 p.m. It always corrects the move. It was going down, retested the lows at 2, 3 p.m. hits, and now it's looking like it wants to break structure to the upside. If it closes above here, then the next structure points will obviously be this one here, and then the most recent one will be here, you know. So yeah, but I don't know why, but 3 p.m. I think it has something to do with futures. I'm not fully sure, but 3 p.m. always seems to have that volume. But we've been in this trade for ages. Entered here 5 hours and 35 minutes now. At 5 p.m. I shut all my trades, no matter in profit, loss, no matter where it is. I close them at 5 p.m. because I am not holding anything after 5 p.m. 5 p.m. the markets basically go flat. They obviously do move, but after 5 p.m. they kind of just go flat. So that you have this big impulse to the downside, 5 p.m. hits, and it just does this, you know? So what, since 5 p.m., how much did it move? 17 pips since 5 p.m., you know? What about the day before? 5 p.m. Moves about 4 pips in an hour. Yeah, about 4 pips in an hour. Do it on top candle. About 9 pips in an hour it moved at 5 p.m. But yeah, even these moves, they look like they're massive moves, but it's because people aren't trading at these times. So every buy and every sell is gonna look major. But like if you look at these pips, oh, 8 pips, might be wrong. How much is this range? 34 pip range. But normally because it's after trading hours and a lot of people aren't trading at them times, a lot of the big imbalance candles or bearish candles, because of spreads and people aren't active at them times, candles look massive, but it's only like a 3 or 5, 6 pip move per candle, you know. But this candle looks massive and it's a 13 pip move, so that makes sense. But then if you look at a candle in London session that's small, let's say this one for example, small candle, 3 pips. Yeah, I don't know what I'm saying now. I was trying to make a point. The point's not making. Yeah, just gonna allow it. Trying to say that before the big sessions, the candles look massive, but there's not that many pips in them. There's not that much going on. But the examples I'm giving are not helping my point. So I'm gonna leave it at that. This trade's got 2 hours left for me to close. Yeah, so it's got 2 hours to hit TP. Let me drag this actually. Let me drag this like that. That look better. Yeah, it's got 2 hours left to hit TP. If it doesn't hit, we'll manually close. If it breaks structure to the downside, we'll manually close. Yeah, man, this is just taking ages. But see how much we're up. So we are up 300. So 3% we're up. We're up 3% on this trade. But yeah, see how it goes, see what happens, and hopefully it hits TP within the 2 hours. But it is what it is. And that is it for now. So it is now 5 p.m. as you can see, and I've been in this trade for 7 hours and 30 minutes. TP has not hit, so I'm going to manually close because it is, as I said, 5 p.m. So I'll close the first trade, close the second trade, and that leaves off with a profit of $308 today. So 3% today, 7 hours, made 3%. So what a waste of time. But at the end of the day, a win is a win. And yeah, that is trade done. I think I should start moving my TP to where I actually got out so it makes more sense when I go back and back test. So where did I get out here? Got out of the breaker structure right here. So got out there. Or kind of got out break even. So basically, yeah, it was a loss in it. So $50. So I got out there. Uh yeah, so that's that trade. But that's why risking 2% for me makes sense because as you can see, 15 pips on this trade. So I'd have been up 1.5% from this trade, and in this trade up 17 pips, so I'd have been up 1.7%. You know, so at least even though it didn't hit TP, if I was risking 1%, I would have gained 1.5% or 1.7%. But because I'm risking 2%, I gain 3%, if that makes sense. Because obviously I'm doubling up and stuff. But even though it didn't hit TP, I can still be happy with ending the day in 3% profit, you know? Because there's people out there that don't make any profit, let alone 3% in one trade. So I could be happy with that. We just come back then tomorrow. But yeah, that is the trade. 7 hours or 30 minutes. Also, it is summer holidays as well. So that could explain why I was in the trade for so long. That could explain why price action has been so slow. But yeah, it is what it is, man. Just some trades are gonna take faster, some trades gonna take longer. Just is what it is. But yeah, that is it for Tuesday. Come back Wednesday. 8, 12. Yeah, see what's going on tomorrow. But yeah, that is me for today. And last thing I want to add in, I might, after a couple trades on the 5 minute, what I might start doing is moving, is taking a trade, risking 2% or risking 1%, just see how it goes. Risking 1%, stop loss beneath the lows. I'll give it a 2 pip breathing room and then a 1 to 3 from there. So for example, a trade like this. So enter from the same places. So that would be the 50%, but enter from the 50% like this. And let's say stop loss beneath this low because that was a low that I didn't want price to break. So let's say that's like a 4 pip stop loss. So I'll make my stop loss 6 pips. And then I'll just do 1 to 3 based on that, you know? And then as you can see, TP would have been hit. Or 1 to 2. I could do 1 to 2 for simplicity's sake. Like even like a trade like this, like here. Didn't want price going above this high here. So stop loss above this high. Would have been 3 pips. But we'll make it 5. So it's got 2 pips, breathing room. And then a 1 to 2. See, TP would have hit. 1 to 3, TP wouldn't have hit, which is fine. But I feel like risking 2% doing that would be probably, I don't know if it would be more profitable because I haven't tested it. But even like situations like this, like for example, break above Tokyo session. This is a bit of structure that I can use. And then a 1 to 3, a 1 to 3. My fixed risk to reward, right, would bring me to 24 pips and it would have reversed. And because there is no structure, this is the only structure, I would have lost this trade. So I would have been up 2 point, I would have been up 24 pips and then lost 6. So if you actually deep it, because I'm up 24 pips and it's now reversed and I've lost, I'm minus 24 pips, if that makes sense. Because I was up 24 pips, now it's reversed all the way and then stopped me out. So that would just be an annoying trade to take. But let's say I had my stop loss beneath the low, so broke structure, so this would be low. Let's say there, 6 pip stop loss, add 2 pips for breathing room. So it'd be an 8 pip stop loss, 8 pip stop loss, 1 to 3. As you can see, hit TP and I would instantly reverse. Even a 1 to 2. Instant TP. TP would have hit within, TP would have hit within 5, 10, 15, 20, like, you know what I'm saying, 20 minutes. So I might try that on another account, you know? It's just about finding ways to maximize your time on funded accounts and pass as quick as possible for me anyway. 'Cause I see them as a business, you know? When you're buying them, it's just about making sure you're able to return how much you're buying and profit out of them. Because you're not going to have the same funded account for years, you're not going to have the same funded account for months. They'll eventually lock you off after a certain amount of payouts. So it's about maximizing how much you can make and how quickly you can make it. And then once they've locked off your account, you go into another funded, you go into another one, or you start investing in your personal. Do you know what I'm saying? So you just have to look at your strategy and think, right, can I tweak anything to pass quicker? Instead of maybe passing in 2 months, can I try passing a month? Maybe instead of passing in 1 month, can I try? Do you know what I'm saying? But it's good to see and see if there's any tweaks you can make to just be as profitable as possible. When you're trading your personal account, I don't think that's when you should tweak things. You shouldn't tweak your strategy on your personal account to see if you can make money faster because it's your personal account. Whatever you make will go in your bank account. Whereas with a funded, you could take so long to pass. By the time you've passed, they've gone bankrupt. By the time you've passed, they shut down, you know? And you've just wasted months and weeks of good trades that you could have taken and actually made money out of. So it's about passing as quick as possible. Because if you fail, what's the worst that happens? They send you an email, okay, and you buy another one, you know? And that's just simple. If you've got your last $400, don't buy 100K and spend it all on one account. Buy a bare 10K account so you have bare opportunity to fail. But then when you do pass, just make sure you make that 400 back, you know? Like, be strategic, treat it as a business. If you've got your last $100, are you going to invest in one stock? No, you're going to look into numerous stocks and invest in maybe three. You're not going to just, oh yeah, going to put all your money in one because if that goes left, it's dark. Unless it's the S&P 500 and things like that, then that's different. But you know what I'm saying? You're going to have your safe investments with $100. You're going to break it down, safe investments. um high return investments, you know, the ones that are kind of a gamble like tech can give you high returns. It's not guaranteed to be the next big thing in the next 10 years. It's going that way, but it's not guaranteed, you know. So it could go left, it could go right. But yeah, you just need to know what you're dealing with and know how much you're dealing with. You know what I'm saying? Don't really follow anyone on the internet. Follow what's in your bank account because your bank account is the true you still. But yeah, this trade took long, so definitely gonna see how many times my stop loss would be hit if I just put my stop loss beneath the low or above the high that I'm buying or selling from, you know, with a 2 pip breathing room and see if that could speed up the process. But you know, it'd be something I test, it'd be something I trade in the live market, risking 1%. But for now, I'm gonna keep rocking with this. But yeah, trades like this make me think, oh, is there some tweaking that can be done? I'll still trade this way, but I think I'll have another account that I'll try that with, see how it does, you know, see how quickly it passes. Okay, this trading this way took this long to pass, trading this way took this long to pass, but how many times realistically am I gonna fail trading like that? How many times am I gonna fail trading like this? You know? And then whichever in the long run costs me the least amount of money but gives me the best upside, that's the one I'll obviously go for, you know? If out of 10 funders I blow five, but I make more trading this way on them five that have passed, or this one blows eight, or this one blows three, but it takes 2, 3 months per account to pass the other seven, then I'll go for the one that gives the quickest upside, but the best upside, you know? You have to look at the ups and downs. You might pass more, but then you're trading it for 5 months each, 3 months each, and then it's like, does the upside even matter at that point in time? Unless you're making millions or thousands, then that's different, you know? But if it's a couple hundreds or whatever, you're not gonna be thinking, rah, took 3 months to pass and I'm making a couple £100 now. That's not, you might as well just get a job and work at Mackey's or something at that point, type of thing. But yeah, yeah, that's it for today. That's all the yapper. Wednesday, roll on.